scope decision, whether it is a broad or narrow, that will decide. The removal right, whether it can be removed or it cannot be removed. The remuneration is market driven or excess of market driven. So if he is working as a professional, he will earn 5 lakh rupees. But here I am giving him 50% of the profit, then definitely he is working as a principal. So the variability involved. So all these circumstances actually will play a critical role in making the decision. Delegated rights. Now, any interest held by related party. Another new concept introduced. So, for example, company A has got say 40% in company S, which is another company. Now, company A has got 40%, and another company or the director of that company has got in his personal capacity another 20%. So, director and the company together hold 60%. In that case also control exists, right? But there has to be agreement, right? For example, companies, there are Tata Group or Birla Group. There are many companies in Tata Group. All companies are in silos. Tata Steel is owned by Tata House directly. Tata Chemical is again owned by the holding company directly. There is no cross-holding. On a standalone basis, Tata Chemical, Tata Motors, Tata Steel, there is no linking at all. All these are basically fellow subsidiaries, right? You won't find any conflict between these companies. Now, if these companies have investment in one company, where individually they don't have control, but by agreement, those 5 companies can actually control the 6th company. In that case also control might happen. So, related party, you will also consider whether the shares are held by the related party and whether the control is triggered or not. Now, to consolidate,
which company will consolidate?
Right. So, to consolidate in this case, the company who has got major holding or the major stake will actually consolidate. Right. Now, it will consolidate only to the extent of their share. Remaining all will come in minority interest. Right. Relationship with other parties or de facto agent. A Limited, a manufacturing company. Again, this is a classic example, So, A Limited is a manufacturing company and it is operating in a very particular tax zone where A Limited can lose significant tax benefit if it breaks the rule of selling goods outside territory. By local rules, it has to sell within the territory. Now, to meet this condition, what A company does is A company establishes or basically owns another company, company B, or even though there is no shareholding in the company B, the shareholding could be by a third party, but entire production of A company is being sold to B company, right? And B company finally ultimately sells in the open market outside the territory. B company has very limited resources, right? In those cases, B company will become agent, de facto agent of A company, and B company will get consolidated by A company, right? A very classic example gets in other cases also. So this can actually trigger in normal purchase and sale agreement also. A cement company decided to operate a territory without opening a plant, without making its own investment in the plant. So what it did is, in a particular area, instead of having its own plant, it had a tie-up with another company, where the other company would manufacture, right, and give the entire production to company A, right? Entire production, the entire where to buy the material was also decided by company A. In this case, the company was manufacturing was totally independent company, no holding by company A. But because of this, the consolidation got triggered, right? So when you have all the powers, even though there is no equity, but by directing the company what to manufacture, when to manufacture, by taking over the entire production, you are controlling that equity, right? So you will consolidate all the assets, liabilities, income, expense, and then remaining part will go into minority interest. I mean, remaining in the sense, full part will go into minority interest for this.
Hindustan even does this. All is manufacturing activity.
Right. So it can impact FMCG, it can impact pharma companies. Pharma also, there are a lot of third-party manufacturers. They call it 3PL.
With all the controls.
Right. Right. Only thing is,